Hi everybody, this is Osprey from MyChartCoach.com, and with the holiday shopping season coming up here, I thought it was a good time to take a look at the apparels, the retailers, even GoPros thrown in here, but mainly retailers. And first up is Children's Place here, ticker symbol PLCE. This is an old chart. The annotations are old. It caught my eye because it's heating up. You have RSI at 51 here, so if it can stay above 50, that would be bullish. Same thing with Fasto here. There's a bullish crossover in 80x, the green line crossing over the red line. And so today there was a bullish close above the gold and the green lines, above the 150-day simple moving averages. It also closed just above that middle Bollinger Band at 130.32. So if it can stay above that level, above these levels, then it should push higher up to this 200-day simple moving average at 133.49. So a break above 133.50 is what we're looking for now. Hold 130.50, break above, stay above that 130 level, and then break above 130.50 should signal that it wants to head higher. If it dropped below 130, that would signal more consolidation. Okay, take a look at Target here, ticker symbol TGT. Keep an eye on it. It's been consolidating in a sideways channel here. It looks like it is setting up. If you look here, it's hitting the middle Bollinger Band currently basically at 88. It's at 88, 87, 97 is the exact level to break. As you can see, look at all these candles. The real candle bodies, the closes are all within this super tight trading range between 87 and 88. And so if Target can break above 88, then you're looking for a run up here to the top of the next channel, which is up here around 89.50 or so, 89.35. And so there's not a lot of big upside here until it gets above this 89.50 zone, and then that's where it could start pushing higher. But right now it's about breaking 88 and turning that level into support. Okay, take a look at Walmart here. So ticker symbol WMT. All right, so it did drop below 50 on RSI, so it's cooling down. It needs to get back above 50, and it is at oversold levels on Fasto. It's way down here at 8. So this is a technical bounce zone. You can see the last time it got down at this level, that's where it had a technical bounce. And so same type of setup here. A doji candlestick formed today during a pullback after a gap down open. It's also hitting that lower Bollinger Band. That did form the bullish doji star reversal pattern. So we'll keep an eye out for a bounce tomorrow. You keep in mind, dojis during pullbacks many times signal a bounce. And so what's going to happen here, or what needs to happen, is it needs to break this pink line. That's EMA4 at 94.64. As long as that's resistance, the downtrend's intact and the bears are in control. If it remains resistance, the target would be the 50-day simple moving average at 92.88. If it can close above the 94.64 level, look for the candles working back to that middle Bollinger Band. It has to get above that middle Bollinger Band and turn it into support to head higher. Okay, take a look at Nordstrom. So Nordstrom's had a big pullback. Once again, very, very cool here on RSI at 43. Needs to get back above 50. It's been oversold on Fasto for several days here. They drove it down. It's gone sideways. It's finding support at this level here. This is it's back in this same trading range from back here in August, and so you can see here it had a little channel back in August, and so now it's back in that same range, and so basically EMA 13 is the top of the channel at 61.73. You'll right now it's at the bottom of the zone. If it can break above the EMA 4, that pink line at 60.32, it should run back up to 61.75. It might top out at that level. Once it breaks above, that's where you could get a run up to that middle Bollinger Band at 63.36. Just like Walmart, if it came down here if it fails to break EMA 4, that 50-day simple moving average will be the target at 58.11. Now many times the 50-day simple moving average, if it holds, it's a great level to reload for a technical bounce. Same thing here. If this fails to bounce right here and it came down and hit that 50-day simple moving average, that would be a great entry point for a technical trade off of support. Okay, take a look at LB brands here. Okay, so yeah, this is trying to push higher. It's hitting the top of the or bottom of the gap resistance level You can see there's a gap down here between the 22nd and 23rd of August, and so it's hitting the top of the gap is this lower red line. Notice how it closed just below that level. The top of the bottom of the gap level is always a tough level to break. You can see all these candles are hitting it. Just above that is the recent high close, which is the closing price on the 21st. If it can bust above these two red lines, it could possibly fill the gap and run up here to this 375 level, possibly up to the 100-day simple moving average at 32. That's the upside potential on a break above this bottom of the gap level. Notice the volume is really light. All it needs is some bulls to step in and push higher. Now to the downside, it needs to hold the EMA 4 at 30. If that broke, you have the 50-day simple moving average at 29.76. That's a must-hold level. Notice how all these candles are holding this level. If it were to break below that, that would signal consolidation. It's only a good setup for a bullish move if it can stay above that level. Okay, let's look at Burlington Stores, ticker symbol BURL. Yeah, this was a big winner in our chat. Good job, Venkat. He nailed it down here on the break above EMA 4. So it had been in this long downtrend. That break above EMA 4 on the 25th was the signal to take a position. People in the chat loaded on this and were rewarded with the big gap up open and a run above that middle Bollinger Band. That was a big moneymaker. So congrats, everyone. Now it needs to get above this middle Bollinger Band that's currently at 164.96. Okay, so that level needs to hold. It needs to. Right now, it's hitting that resistance level. It's basically trying to turn that level into support. It closed above yesterday, and then now it's got to basically get above 165. Trading above 165 would be bullish. It would signal the possible start of a new uptrend. If 165 is resistance, it could possibly come down here, retest that 50-day simple moving average, or possibly fill the gap between Tuesday and Wednesday. So real important, it gets above that middle Bollinger Band to get a new uptrend going. So keep an eye on Burlington here. We'll see if it can get moving. Let's look at or keep moving, get that uptrend going. Okay, whenever you're looking at the retailers, you have to look at Macy's. So let's take a look at ticker symbol M here. What's happening with Macy's? You know, it's been just pretty blah here. You know, they drove it down after the big red candle. You can see it had the sell-off, and then it's just pretty much, yeah, it hasn't really gone anywhere since then. It's just been in this kind of holding pattern here, and so you have this wedge. It's not really quite. It doesn't really have. It has the. Yeah, it's more of like a falling wedge, or you could put in the horizontal support here, and it could be a descending triangle, whatever you want to call it. It's coming to a flex point here. Okay, it's going to come to a point here where either this descending support line or this descending resistance line is going to break. Okay, so one of the two lines is going to break here, and so if it breaks above the red line, which is lined up with the middle Bollinger Band, that's going to signal upside potential. Okay, notice how all these candles are hitting that level and failing to break. It's just failing to get above the middle Bollinger Band, which is also the 20-day simple moving average. Once it gets above that 35.50 zone and turns it into support, that's where it could come up to that 100-day simple moving average and test that 36 level, 36.30. And now to the downside, if it keeps riding the EMA 4 at 34.77 resistance, that's going to signal more downside risk. Right now, it has to hold the horizontal support. That was the closing price on the 25th. If it were to close below that level, you know, break that 34.25 level, that's going to signal more downside risk. So just keep an eye on Macy's. It's best when it has this kind of pattern. Just to keep an eye on it, you know, stock your prey, and then wait for the break above resistance for that signal to finally take a bullish position. That's usually the best way to do it. Otherwise, if you load too soon, you could get stuck holding, or you could get stuck holding the bag if it drops lower. Okay, let's look at GPRO here. So yeah, GoPro is making a bullish move. So don't look now, but you know, we're heading into the holiday season, and GoPro's doing well. Closed up 5% today. You know, a lot of people thought they were going to go under, but they've managed to stay alive. And you know, after making that bottom back here in April, it's been in a nice uptrend. So it came down here in April. Did even have a big volume spike. It wasn't even like people were you know, loading hard down here in the April low. It just kind of, you know, slowly been working its way higher. There's been a couple volume spikes that are showing some interest here, and then yeah, just the recent volume spike yesterday. And so the bullish development today, and why I threw it in the video, is because it closed above the blue line. That's the 300-day simple moving average. The last time it closed above that level was way back here in November of 2017. Okay, and so it failed to hold that level and it pulled back. And so the same thing could happen again. History could repeat. You could see it was a similar kind of thing. It has the white and the black candles above the 300, failed to hold, and the downtrend continued. And there is a red flag on the chart. There's an unfilled gap between it looks like Tuesday and Wednesday. So if it did pull back, it could fill that gap. You want to see the 650 level hold. Right now, it's just really what makes it interesting if it can stay above that 300-day simple moving average at 715. Trading above that level will signal upside potential. Trading below that level will signal downside risk. It is hitting the top of this gap resistance level from back here in January. The gap did fill. The gap filled yesterday. So a gap fill can be a climax event. It needs to break above 750 to head higher. Okay, now we're going to look at a couple of the piece of junk retailers here. Let's take a look at a couple of the junky ones for everyone. Penny traders. Take a look at SHLD here. Closed down 10%. It's getting pounded right now. RSI is at 32, so it's not at like the maximum pain level. It's not below 30 yet, but you do have Fasto at 1.45, so it is technically oversold. It's on a 5-day pullback right now, and it is breaking below that lower Bollinger Band. It's testing the $1 support level. Many times you will get a technical bounce off of the $1 level, so look for that. If you do get a technical bounce off of $1, it's going to have to break above EMA 4 at 111. That will be the sell zone until it breaks. Notice that it's failing to break that level. Once it gets above, that's when you could get a possible run back up to that middle Bollinger Band. But as long as EMA 4 resistance is intact, that's a signal, signaling more downside risk. If you're writing puts, keep writing them lower. But for one thing, you do not want to be long and holding overnight if candles are forming below EMA 4 on the daily chart. Keep an eye out for a bounce sometime soon there. Okay, let's look at JCP here. Okay, yeah, this is another bloodbath, down 9% today. RSI at 36. It still has a ways to drop before it gets into like that really pain where it gets below 30. Fasto did hit very oversold levels. You have now the bearish crossover. When the red line crosses over the green and black line to the upside, that's the opposite of the bullish crossover, where the green line crosses over and the bulls are taking over and it signals the start of a run. This is the opposite. If you're looking at indicator ADX with plus DI minus DI, when the red line crosses over, that's a signal the bears are taking over. It's a red flag. Now, if that red line stays above the black and the green line, that's going to signal more downside risk. It is on a 4-day pullback. It's hitting some key support zones. This 170, 165 to 167 level, it needs to hold these low closes. If it were to break below that 165 level, that would signal major downside risk. It came up here. There's a gap. And it failed to stay above the bottom of the gap level, and so that does signal more downside risk, more consolidation. Okay, let's look at ROST stores. Now we're going to finish with two awesome charts. Okay, these are the some top dogs in the apparel retailers sector there. It's just super strong. I mean, look at this chart. First off, you have RSI at 69, so it does tend to top out when it hits the 70 level. Fasto there at 77. It's just super strong. I mean, look at the chart. It's just been heading higher for quite some time. As long as it's riding EMA 4 at 98.61, it signals more upside potential. It's going to have to bust through this all-time high to head higher. All right, and then finally look at Lululemon here. Another super strong chart. Yeah, it's just on a multi-day run. Look at all the green candles in a row. We have other stocks in the sector that are struggling, but this is just keeps pushing higher. People, can't get enough of Lululemon. At some point it's going to have to take a breather. Once it drops below the EMA 4 at 159.30, it could cool down. Notice all these candles are above EMA 4, so it doesn't drop below EMA 4 very often. All right, so we'll see if it can keep pushing higher. It's just going to be real important that it stays above that 158 level. Okay, that's that high close that it just broke. Staying above signals that it wants to keep pushing higher. Okay, thanks a lot for viewing this video. Really appreciate it. Come check out the chat. Thank you.